We start today's market talk. Volatility is the price of admission. The price inside is superior long-term returns. To benefit from wealth building potential of equities, investors need to understand that pullbacks and drama is inevitable part of the journey. In investing, that cost is putting up with and enduring a never-ending chain of uncertainty and volatility, ups and downs, booms and busts. If a stock goes down 20-30%, you haven't made a mistake. Most of the time, it is the cost of admission. Market outlook, as I see it, the upheaval in geopolitics is an immense opportunity for India, one that needs to be supported by reform and business friendly policies. India is at the cusp of a strong growth. It has given a second chance of industrialization. Balance sheets are clean. Infrastructure is being rolled out. PLI schemes are in place. National champions like Hindustan Aeronautics are being created. Aim should not be to be just China plus one, but to replace China as a manufacturer for global north. Now, the major stocks which were in focus last week, first was Vodafone Idea. The FPO's success gave the company the breathing room for a couple of more years. Vodafone's FPO has given it 2 years of talk time. Company faces a 2-year deadline to commence payments to government for its spectrum and AGR installments. FPO of 18,000 crore saw a subscription of 6.36 times. After FPO and preferential allotment of around 2,000 crore to promoters, VI promoters now hold 38%, Government of India 24%, and 38% with public. Company's debt is 2.38 lakh crore with negative net worth of rupees 74,359 crores. That is 74,000 crore. It made a net loss of around 23,500 crore in 9 months of FY24, which is higher than the money they have collected from FPO only. It lags in infrastructure and product offerings. Market share is only 18.8% and it is constantly losing market share. Robust business plan capable of generating sufficient cash flows to begin repaying the government within the designated 2 years time frame is required. If the government converts its outstanding dues to equity, it will be bad for shareholders because there will be a big equity dilution. In FY26, company is required to pay 29,000 crore to the government, followed by annual payment of 43,000 crore from FY27 to FY31. In my opinion, some life has been injected, but it is still not a investable stock. So probably it remains a going concern, but investment is a different ballgame. Kotak Mahindra Bank was barred from onboarding customers digitally or issue fresh credit cards. So Kotak Bank, even if it takes corrective action, it will take a year to get back to business as usual. The reason is task to get deposit will get challenging. It will also impact credit growth, business, and NIMS. Kotak Bank has much less physical presence, only 1869 branches, and onboarding is mostly done digitally. Digital Bank 811 and zero minimum balance account are the key drivers of high volumes for Kotak. Growing unsecured book through credit card is the key strategy to improve yield on advances and improve NIMS. Expect no bounce back given the challenge due to RBI directive. It will impact earning growth, return on assets, book value substantially. Just for reference, HDFC Bank in last year opened around 1,400 branches, and adding new branches results in operating expenditure, which reduces the NIMS and profits. HUL's sequential numbers continue to be impacted by sustained demand weakness, slow pace of rural growth, and regional competition. Sustained demand weakness has resulted in no or zero growth in HUL's revenue, despite price increases. Net sales were down, but gross margins improved and net profit declined. EBITDA is not expected to grow due to higher brand investment and marketing. It has got basically three segments: home care, beauty and personal care, and food and refreshment. Now, home care was good. Beauty and personal care saw dips in sales, and food and refreshment had limited volume growth. So it is presently trading at 40 times FY26 expected earning of 56. It can always come down to around 35 times earnings. LTI Mindtree earnings disappointment came from two project cancellations. Revenue contracted sequentially both in reported currency and constant currency. From Q1, they will be focusing on growth, then margins as per management. But EBIT has declined from 16.4 to 14.7% year on year, which will impact their profits drastically, even if there is a growth in revenues. FY24 order book is at 5.6 billion. FY25 expected revenue is 4.6 billion. So that means they have order book which will support at least 1 year plus of revenue, expected revenue. Their EPS is roughly 175 rupees. So 2025 PE should be decent level to get into this stock. So this stock can come down to 3,500 to 4,000 levels. Is FY24 performance the peak for Bajaj Finance? The reason is net profit increased 21% year on year, lower than usual growth rate of 25 to 28% due to higher provisions with stress building in rural consumer loans. Margins were lower due to higher cost of funds. After RBI tightened norms for unsecured lending, provisions were up 50% year on year, AUM growth of 34% year on year. The point is Bajaj Housing Finance loan book is growing at 30% right now, which is good to benefit from wealth building potential of equities. On the margin front, management is guiding for 30 to 40 basis point fall in H1 FY25. Mortgage business is the same size as consumer financing, that is around 1 lakh crore with ROE and ROA of 15% and 2.5%, while Bajaj Finance has a ROE and ROA of 22 and 5%. So roughly, if you see, the consumer loan and the home loan oblique mortgage business is of the same size, while the financing, that is the consumer finance business, is double the ROA. Hence, as the home loan business is growing, the overall at the company level ROA, ROE are going down. And as they are diversifying into other businesses like microfinance, car loans, gold loans, etc., the margins are going down and it is margin dilute. It is trading at around 4.5 times book value of FY26 earning, while the guidance for earning is reducing. Dalmia Bharat commissioned new capacities, but despite that, there is a fight for market share gains among all the large cement companies, which is putting intense pressure on realizations on a pan-India basis. Q4 volumes rose 12% year on year, but raw material prices have impacted gross margins. EBITDA per ton has fallen to rupees 743. Commissioning of new capacities and fight for market share gains is putting intense pressure on realization. Cement prices have declined 1 to 2% in April from last quarter. They were expected to go up, but that has not taken place because of intense competition. Acquisition of cement assets of JP Associates remain in limbo after 15 months of agreement. FY25 expected EPS is 48, so stock is at around 35 to 37 P and expensive. The relatively stocks like ACC are in 20 plus P, so much cheaper. Now this is the chart of Vodafone Idea. So if you see here, it has come down from the higher levels and come down to its 200-day moving average and is trading around that level of 12.5, and it is on that level. It went dip below that but bounced back. So this is the level to trade this stock closer to that level. Kotak Mahindra Bank, because this stock has underperformed over the last 1 or 2 years. So all the moving averages, if you see here, are very close to each other. So now it has broken that level of 1750, and now it has gone below that. So this is the lowest it has gone over in the last 1 year or so. You see here, and it has come to 1600 levels. Now it is oversold, but it can, despite a small bounce back, it can still fall more from here. Bajaj Finance, if you see the chart, this is a weekly chart. So if you see here, it has fallen below the 100 EMA, and that is 6821. So it may head towards the 200 EMA of 6100. We'll discuss this in detail subsequently, but these lower levels are possible for this stock. Talking about technical issues, US stock bounced on Friday as Alphabet and Microsoft earnings revived hopes for a sustained big tech-led rally. Latest reading of Fed's favored inflation gauge, personal consumption expenditure rose 2.8% above estimates of 2.7%, but unchanged from previous levels. The bets for rate cut have been recalibrated from 7 to 1 now. Despite all this, decent performance from some magnificent 7 stocks. Tesla and Apple are underperforming the other stocks. Last Thursday's GDP report raised possibility that rapid growth is slowing, but cost of living is still going up. GDP grew at 1.6% while inflation jumped to 3.4%. Hence, there is a big possibility of stagflation, which is reflecting in the basic parameters for US markets. This is US 10-year yield, the weekly chart. It has gone up. It has gone up to 4.7 level. It corrected a bit, but still it remains high. Remember when it went to around 5 levels in October, November, the stock markets had corrected around 10%. So this is a very big opportunity, chance for a correction here. Dollar index has broken through the declining trend line. It had broken out to around 106 level. Now it is consolidated there, looking for further direction on rates and GDP. So it made a doji last week because the GDP was also low, but inflation was high. So right now it is looking for direction as to which level it can go to. It can go to 108 odd levels, but it can always fall back to the moving averages, that is around 104 level. Brent crude had broken out above this declining trend line and above the moving averages, went to around 90 plus, but has corrected after the conflict has stopped in the Middle East. Now it will depend on demand and supply from here. So right now it is okay. So it is trading at around 83, 84 levels. Gold broke up, made a high of around 2400. Now after this GDP data and other parameters, it has corrected now. It came down to around 2300 level and then bounced back from there. So it will be dependent on the rate trajectory and the buying from central banks in this. Nasdaq 100, after the collapse in the last week, it bounced back, basically based on good results. So we'll have to see where it goes from here. Right now it looks good. Similarly, S&P 500 had corrected to 200 EMA on weekly charts and then bounced back from there above 5,000 levels. So this has to be watched very carefully. It can test, in case the results are good, it can test that 5,200, 300 levels in case there is a momentum due to good results. India's 10-year yield corrected last week. Had come down to the 50-day EMA and 20 EMA. So watch for these levels. It is right now trading between that 7.1 to 7.2 levels. And again, it will take direction from US markets and the direction from RBI. India VIX, this is a daily chart. So if you see here, last week it had a 20% fall. It went down to 10 level and then has bounced back from there. This is generally the low it makes at around 10 level. But that is that shows total amount of any volatility and complacency among the people or investors. Now this is Nifty 50. If you see here, now Nifty 50 after the correction last week, where it went down to 21,800 odd level, and it bounced from 220 EMA. It bounced up and then corrected on Friday. So it is right now slightly in a no trade zone. Uh, it is in positive territory and bullish trend because it is constantly making higher highs and higher lows. So till the time that is being made, it is in momentum and it is trading above the 20 EMA. So that shows strength. So if it has to correct, it will go below the 20 EMA. This is the daily chart of Nifty 50. See here, this was the correction from 22,780 odd levels. It went down to 21,780. So roughly 1,000 point correction which took place. It has retraced around 78.6% to the fall, then corrected from there on Friday and went to 61.8%. So I think these moving averages 22,348 and 22,150 should be levels to watch out for. They should provide support. If these break, then this level of last low comes into play. This is a Nifty 50 hourly chart. So if you see here on 19th, it had gone up. And then last week, on each day, it just went up drastically. And then it had a breakout on 25th, went to around 22,600 level, but could not sustain these levels and then has come down. But till the time it is trading above the 50 EMA. For short term, it has got momentum. Right now, it is above the 50 EMA, as you see from here. 50 EMA is at 22,397. So right now the Nifty closing was at 22,450. So we'll have to see from here where it goes. Reliance, based on the results last week, it corrected from 3,000 levels to around 2,900 levels. So 2,900 to 2,800 is the level to be watched at. So till the time it is trading here, it is in no trade zone. It has to be gaining some strength. It has to cross the 3,000 levels. Bharti Airtel was strong based on likely price rise in future. And it made a fresh high to 1,350. So this is a stock which is momentum, slightly overbought on the weekly chart. Nifty Metals made a fresh high. So these are the complete sector which is momentum. Base metals due to restriction on Russian metals on on the LME London Metal Exchange and the iron and steel basically due to iron was doing well because there was some closure of mine, so the iron prices went up, but the because of that, the steel prices also went up, and Indian steel manufacturers were favored because they have captive mines. So their cost will not go up, but their potential or their price potential is better. So hence their margins will be better. Now among the stocks here, one stock which was doing very well was Vedanta. At around 230, 220, it had no takers just around 3-4 months back. And now it is at fresh high. Reached around 400 levels. Consolidated. There's a stock in momentum basically because of silver and base metals, where it has got large sales on these issues. Hindalco, again, because of aluminum issue, it has bounced back from that 500 level where it had corrected based on novelist news in February. And it has bounced back from that 50 EMA of 500, 520 levels and now made a fresh high. So it is in momentum and this should trade well from here. Hind copper, again, because of deficiency of copper and higher prices, made a fresh high of around 390 odd levels and is expected to do well. This stock consolidated in between because it went into FNO ban, but once it is out of FNO ban, it was made a fresh high. So though it is slightly overbought, but it can still go up because of higher demand. Nifty Bank, this is a weekly chart. It made a fresh high, then it corrected to 20 EMA, but has bounced back. Again, it made a doji. We'll have to see based on the results, because the Axis Bank result took care of the fall in Kotak, and SBI also performed. It so the weak performance of Kotak was negated by the other banks. So we'll have to see how the market takes the ICICI Bank results from here. Nifty Bank took support at 100 EMA, and then it has gone up. So it has traded above the 20 EMA throughout the week. It had taken support there twice now. So this 20 EMA should provide decent support, 47,850 levels. Right now it is above. So if it, let's see what is the impact of results of ICICI Bank now. The one of the stocks which will impact is HDFC Bank, which after the results is generally consolidating between that 1500 and 1540 levels. I think this will consolidate for at least a quarter or so. Now, based on the next quarter results, the fresh performance will be seen. PSU Bank Index performed well, made a fresh high, and there's a momentum basically because of SBI. So if you are here, remain invested. SBI made a fresh high, crossed 800. So it should go up from here. If the results are decent, then it can test the target of 840 from here. So every dip is a buying opportunity here. Canara Bank made a fresh high based on the likely split in the stock. There will be more trading, so there was momentum here. It can go higher from here based on results and valuation. PSE index made a fresh high, was in momentum. It is in momentum for the last year or so, and it has constantly gone up, traded above the 20 EMA. It had a dip, but then still didn't test the 20 EMA. And now it has reached the fresh high. It has recovered all the losses which it made in around a month's time. The stock which was in momentum is BHEL, made a fresh high to 278, and it is expected to do well based on the power theme. RVNL, it had made a fresh high, and then it had corrected, but consolidated around the 20 EMA for a long time, up to 220 odd levels, and then has taken off from there. So last week it went up to 290 level. So if it crosses this 300 level, it can make a fresh high. ONGC is in momentum, should do well from here. We'll see what happens here. Right now, it is doing well. It has gone up because of rise in crude prices, but the crude prices corrected, and then the government had imposed the windfall tax, so the stock had corrected. So, but this is a stock which is doing well along with the basic PSE theme. Nifty IT index, if you see here, it was in a rising channel, but corrected, and then it was going down after the results of TCS and Infosys. Now it is at 50 EMA. It has taken support there. So we'll have to see how the markets now react to HCL Tech and other results. Right now, it is looking weak. So if it breaks these levels, then it can test that 100 and 200 EMA after this. The stock here, TCS, after making a fresh high of 4,200 odd, has corrected. Now is below the 20 EMA and may test the 50 EMA after this at 3,700. Right now, the stock, there is no momentum. RSI is below 50, so we'll watch out for this. I had warned about this stock last time, that is Persistent Systems. It's telling that it is looking vulnerable, and after the results, it corrected. So if you see here, there's a big price destruction from 3,800 levels to now 3,400 levels. And now it is below the 200 EMA. This is a daily chart. So it is below this 200 EMA levels. And with higher volumes, though it is oversold, but despite it may bounce back a bit, but it will fall back. So it has to come down to these 3,000 odd levels from where the rally has actually started up to that 4,400 level. So watch out for this stock. Auto index is in momentum, is going up, and this is the best performing sector based on performance of all of its constituent two-wheelers, three-wheelers, four-wheelers, commercial vehicles, everything. The stock which is in momentum is Bajaj Auto. Good results, good export and local sales. So once it is heading towards 10,000 levels in this momentum. Right now it is consolidating, but will go up. Went down to 8,400, 500 levels, but then it bounced back from there. Nifty Energy is again, it's in momentum, trading above the 20 EMA. It corrected, bounced back, and now it is looking to make fresh high because people are expecting good performance over the next 4-5 years from this sector because of high requirement of energy. One of the stocks here is NTPC based on thermal and renewable sector. Uh, Again, it has performed very well. It has nearly doubled over the last year or so. Uh, Here, if you see here, it went to high, then it corrected, but then it has bounced back. So every dip is a buying opportunity here. Infrastructure sector of Nifty is doing well. All the stocks are performing and trading well above the 20 EMA. This part has also nearly doubled over the last year or so because of good growth. I have shown about this ABB, the daily chart. It made a flag and pole pattern breakout. So the length of the pole was around 1500. So the breakout was expected to be around 1500 points. So from 5,500, 400 levels, it was expected to go to around 6,900, 7,000. Went to 6,800 and then is consolidating, but is consolidating still above the 20 EMA. So it may break out from here or correct. So based on its results actually, but it is having higher volumes over a period of time. So it broke out with higher volumes. Midcap index for Nifty made a fresh high, went to 50,000 plus, and it has recovered from the dip it had for 4-5 weeks when it tested the 20 EMA, and now it is making fresh highs again. Similarly, with the small cap index, where it had corrected to 20 EMA, went below that, but bounced back, taken support, and now has again made a fresh high. So stay invested in this group of stocks. The stock which was not performing well last week, one was Electra Green Tech. This is a weekly chart. Made a high at around 2,200, but has come down because of poor results and higher valuations and poor execution in the last quarter. Let's see, it has twice bounced back from this 1,600 level, so that should provide a good support. So that is a level to be seen for this stock, but I think it is expensive, so it should test the 50 EMA at 1,400 or below also, because once it bounces, after that again it will get sold. The stock which is in momentum is Motilal Oswal. This is a weekly chart, so if you see here, it has nearly become 3x in the last year or so. It took support at 20 EMA and then has bounced back, and then from there in the last month plus, it has nearly doubled and come up with good results. So this is a stock in momentum and should be traded for on a long side. Another stock which is from the same wealth management sector, which is moving well now due to structural transformation of the business. It was at around 170, 180 level, then bounced up to around 200, 210 level, consolidated for 2 weeks, and then again has made a fresh 230 odd level with higher volumes. And it is in momentum. So it is expected to do pretty well from here. So if you're here, trade on the long side. Now we'll discuss certain stocks. First is MCX. Expect MCX to deliver a CAGR of 27% to 31% and 166% in revenue, EBITDA, and PAT over FY 24 to 26, led by a 53% CAGR in options volume. Now, such high level of EBITDA and PAT growth is basically because their expenses are going to reduce drastically. Medium-term drivers of volume growth are new product launches, futures and options, that is short duration contracts, continued volatility in key commodity prices, gold, crude oil, and natural gas amid global uncertainties, a rise in retail participation in the options market. MCX has approval for 10-gram gold futures monthly contracts. Currently, 10-gram gold monthly contract is in the testing phase. So the shorter the size of the contract, the more trading will take place. Total operating technology costs, including AMC cost to TCS and depreciation, shall be in the range of rupees 60 crore. Volumes in the energy segment jumped 121% year-on-year, fueled by 127% year-on-year surge in crude oil volumes. In fourth quarter FY24, bullion volumes rose 56% year-on-year, driven by 69% and 42% year-on-year rise in gold silver volumes. Future volumes came in at rupees 11 trillion, that is 11 lakh crore, down 15% year-on-year and 16% Q-on-Q, while options volume surged 148% year-on-year and 18% Q-on-Q to 71.6 trillion, that is 71 lakh crore. When volatility is higher, maximum trades happen in long-dated contracts, which carry lower premium realization, leading to decline in premium to notional turnover ratio. So this is one of the reasons why the revenues decline and the profits decline despite higher trading volumes. New products which they are planning to launch are still work in progress, so it will take some time to realize the potential of new products. Operating technology costs will now not be linked to volumes, resulting in relatively stable costs going forward. Hence, that is why their profits and EBITDA is going to be up. If you see here, their profit and loss, the sales from estimates declined around 13%. So the estimate was around 209 crores, came to around 181 crores. But expenses was much lower than estimates, to around 48 crore. So that helped in EBITDA. It became positive to around 102 crores, and profit after tax of 87.8 crore, though it was below the estimate by 5%. Still good. Year on year, there is a growth of around 12% Q on Q in volumes. Volumes had gone to around 82.7 trillion rupees, and it was expected to around 88 trillion, but still it's okay. Because of volatility, maybe the volumes would not have been there. This is the sector, its performance. So if you see agro commodities, there's not much of trading, but the base metals, bullion, energy, especially the bullion and energy, the volumes are much higher in terms of billions of rupees. So that means it is roughly around. So if you see here, the bullion is 18% and energy is 80% of the total volume. And the growth also, which is highest in energy part as compared to and little bit less in bullion. But the base metals saw a degrowth, and index also was down. Gold volumes improved. You see here, silver volumes were constant. Copper volumes, despite the momentum in copper, declined. So I've seen more people were trading in Hind copper stocks than in copper out here. And crude volumes also went up. So that is in terms of trillions of rupees. Volume sustained led by option segment. So you can see year-on-year improvement of 97%, translating into revenue growth of 34%. Loss at EBITDA level due to payment to 63 moons has declined. So now it is positive EBITDA, and profit after tax was positive after a loss in last 2 quarters, and it is expected to perform very well from here. Uh, this is their expected earnings. They are expected to do around 916 crores of sales and 1100 crores of sales in the next 2 years. Cost of services are going to be lower. EBITDA hence will be higher. Uh, so it will be around 62% of net sales, which is very good and has improved drastically, which will drive the profits. So the profits will be much higher, roughly 473 and 589 crores. So improvement in net income is going to be pretty big from last year, where there was a loss. So it's expected to do around 92 and 115 EPS over the next 2 years. So which should drive the re-rating of the stock, and stock can always trade higher. This is a chart. So if you see, it was consolidating around these levels, around 1300, 1400 levels. And now, after the change that they changed their software and improved their trading, the performance has improved, and it has come up to 4,200 odd levels. And the volumes have also increased. So this stock is expected to perform much better from here. You can compare it with basically the valuations of BSE. So there is huge potential for this stock. So this stock should be purchased on all dips from here. Next stock is Cyient DLM. DLM is design-led manufacturing. So this is a subsidiary of the other company of the group called Cyient. It reported another quarter of strong revenue growth. Its revenue jumped 30% year on year in fourth quarter FY24, fueled by significant traction from defense, 78% year on year, and aerospace, 52% year on year verticals. Export accounted for two-thirds of the revenue, while domestic sales accounted for rest of the sales. The order book stood at 2170 crore as of fourth quarter FY24, down 5% and 11% Q on Q year on year. EBITDA margins contracted 100 basis point year on year to 10.5%, primarily due to increase in employee expenses. Management is targeting a 30% CAGR over the next 3 years with an improving margin trajectory. Company has invested in key segments such as cable harness and precision machining in FY24. It has inaugurated a new precision machining facility in Bangalore in FY24, 36,000 square feet. In addition, a couple of weeks back, company has inaugurated a new manufacturing facility in Mysuru to further strengthen its capacity. The defense segment is expected to grow due to opportunities available in the Middle East and India. Management expects the aerospace and defense, medical and industrial segments to account for 50%, 25%, and 25% of the revenue in the longer run. Order book, the basic problem was for the correction of the stock. Order book was muted due to lumpiness in orders. So they come in pockets. So watch for an order win in first quarter FY25. This is what the company is saying, and inorganic expansion for re-rating of the stock. They are planning to expand in EVs and 5G segment. Cable harness is a high margin business, which will improve the margin profile of the company. So they are trying to get into that. BHEL, Thales, and Honeywell are their key customers. So if you see here, this is from their website, some of the product: cockpit display units, flight management system, surveillance radar system, communication navigation system, radar sensors, and RF products. They have expertise in box build integration, wire cable harness, PCB assembly, in circuit testing, aerospace, CNC machining, precision tooling, vibration testing, first article inspection. Now let's see the P&L. The gross sales for this quarter have improved 30% year on year, but it is below the estimates by 5%, and that is the reason why the stock is corrected after the initial price. So EBITDA, etc., were all below estimate profit also. But year on year, the profits have improved by 80%, are expected to do well. Key thing to be watched here is the interest cost, which is going to decline substantially in future. So if you see, the order book is decent, roughly around 2,100 crores. Revenue is growing around 30%, which should be the norm now from here. Consolidated EBITDA trend is good, around 10%. And profit after tax is also growing. So it's expected to grow 81%, which is good. Revenue mix, if you see here, is main is PCB, then box build, cables and others. And but the industry-wise revenue mix, if you see, is majority is defense, then aerospace, and then smaller industrial medtech. What they want to do is they want to increase this industrial and medical technology to 25% each because of better margin potential, and keep the defense and aerospace at 50%. Their growth strategy: strengthen current businesses by large deals, account planning, build to specification, inorganic expansion, uh, acquire some businesses in the geographies in which they are operating at. So expand capabilities. So they are looking for expansion and acquisitions in North America and Europe, Middle East, and Africa. Uh, Looking for new industries and new geographies. So for tap the EMS destination. So industries like electric vehicles and 5G. Let's see their income statement over the next few years. So if you see here, the income is expected to grow around 30 odd percent year on year. But the interest and finance charges will reduce drastically because they will retire some debt because they did a IPO. So the money will be used to retire the debt. So which will improve their profit, nearly double their profit before tax and profit after tax. So these will improve in a big way and nearly double year on year. So this is what is driving the re-rating of the stock. So the EPS from which is 7.7 in FY24 will become around 14.6 and 21.9 in FY26. So this roughly is at 31 times now in terms of valuation. And return ratios are expected to be better. Working capital is and debtor days, etc., are under control and better managed. And other leverage ratios, basically net debt to equity is declining, and hence they have retired the debt, so it will be negative. So that is good. So if you see the stock, this was listed in July. After that, it went up, consolidated, and then it made a high of around 880, came down. So every dip from here up to this 620, 630, 640 levels is a accumulation opportunity in this stock. The last stock today is Bajaj Finance. Management guidance for FY25 is below its long-term guidance on multiple metrics such as AUM growth, credit costs, ROA and ROE. Near-term headwinds on AUM growth as the company is cutting down business in rural B2C and slower AUM growth in the B2B business due to RBI ban on e-commerce and Insta EMI card. NIM compression of 35 basis point versus 20 basis point earlier in FY25 expected due to expected rise in cost of borrowing, difficulty in passing on the interest rate hike to customers, and change in product mix. Elevated credit costs from the stretched B2C portfolio in almost all of FY25 expected. Expect an AUM PAT CAGR of 27% and 25% over FY24-26, and expect Bajaj Finance to deliver an ROE of 4.3 to 22% in FY26. So it is coming down. In the near term, the RBI revoking its ban on e-commerce and Insta EMI cards would be a trigger for the stock. Management is evaluating various options for meeting the mandatory listing conditions for Bajaj Housing Finance through a potential IPO. Fourth quarter PAT grew at 21%. So, and FY24 PAT grew at 26%, which is below their long-term rate. It's the strongest NBFC franchise with astute execution. They are cutting their rural B2C and B2 segment, and B2B will be slow due to RBI ban on e-commerce, Insta and EMI card. They are deploying generative AI to enhance operation efficiency. Rural B2C is the risky part of the business due to loan losses. It has formally requested RBI for review and removal of restriction. 2% of, will show you 2% of borrowings are in external commercial borrowing, so we'll reduce their borrowing cost. And 35% of Bajaj Housing Finance customers are from Bajaj Finance franchise. So that also helps in cross-selling of products. So if you see here, the net interest income has grown around 28% for fourth quarter and FY24, though below estimate. Net income has also grown around 25%, again below estimate, around a percent below. Year-on-year growth is around 25% in operating profit, still below estimates. Net profit has grown around 21% year-on-year, fourth quarter, and 25% for FY24. And AUM has grown now to roughly 3.3 lakh crore, so which is in line and which is expected to improve from here as they get into multiple businesses. So AUM growth is healthy. AUM mix, if you see, the consumer finance business, B2B and B2C, is roughly 33%. Mortgages are roughly 31%. So they are roughly equal, around a lakh crore. The balance businesses are rural lending, gold loan, SME business, car loans, and commercial lending, etc. Borrowing grew at 34%. And money market, they are doing more of money market borrowing. So, which is basically short-term borrowing to take care of the day-to-day requirement at lower prices, while long-term borrowing is through deposits and banks. They are starting into ECB, so that they are planning to increase. Spreads declined 20 basis points, so the spreads have come down, and margins moderated. So NIMs have come down to around 10% over a period of time now. So that will impact profits. So if you see here, net interest income has grown, which is the revenue, at around 28% and is expected to grow at similar level, 26-27%. And profit after tax is expected to grow 21% next year and 28% in FY26. So this is expected to continue with their business like this. Net interest margin is expected to remain at around 10%, which is good. And ROA, ROE are expected to be around 4.2 and 20%. Asset quality is good, and GNPA are around 1% and net NPA is 0.3. PCR, provision coverage ratio, is again improved to around 60% plus. So if you see here, the FY26 book value is on 1800. So this stock is now at below 4 FY26 price to book. And at around 3.5, it will become attractive, roughly at around 6200 odd levels, 6200, 6300 levels. And at around 5400 levels, it will be a steal. EPS is expected to be 365. So EPS growth is also good. So price to earning is 20. So we'll see that. So if you see here, 1 year forward P, this is right now at the lowest. And it will, if it goes down more, it is now below the July 20 levels. So, and below the average. So once it goes to this one standard deviation, below one standard deviation, then it becomes attractive. Same in price to book. So the lowest it made hit was 3. So if it comes there, then it's a opportunity for bulk buying because it's a very good business. You see the chart. This is a daily chart. It made a inverted head and shoulder. So it corrected, but then bounced back on the news of listing or possible listing of Bajaj Housing Finance, but after that just corrected. So first level of support is somewhere around 6,200 and next level of support is around 5,400. So these are the two levels. It went down with large volumes. So once it sells off a little bit more, then it will become oversold. So this is a good opportunity to get into this stock for long term.